Good evening, good evening, everybody. Uh,
Evening.
hopefully everybody enjoying the Mother's Day weekend, not just the Mother's Day itself. Hopefully y'all been getting spoiled all weekend, man. Enjoying the fruits of your labor of being a mother. Hopefully you've been getting spoiled and treated very, very well all weekend. Um, for those that's not uh, still in the midst of the Mother's Day celebration, uh, I invited you all to pull up and do a weekend chart prep with me. Weekend chart prep slash Q&A, if you will. Man, look at that gap up. I just opened up my chart. I just opened up my traded view, and we have a wait a minute. Let me back up. Hold up, Tim. You tripping? I forgot. We on the tube. This is a public weekend chart prep. This ain't just the gang. I gotta back up. I got y'all know when the doors of the church are open, right? We got to do a an official. We got to do an official welcome to the guests. So, good evening. If this is your first time joining Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning into Tim's Tidbits. If you don't know who I am, you know, the handsome fella in the pretty pink button down shirt here, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spot if you don't hablo Espanol. Don't panic. Just Big Spot if you don't hablo Espanol. And you are in tune to another episode of. It's been a long time since we did this. It's been a long time, but this is the weekend chart prep slash Q&A session. Thank you very much. Thank you very much, everybody. Why my camera? Come on, camera. There you go. All right, the camera back on. Nah. See, Zoom be acting crazy, man. The Fed be watching. The Fed don't be wanting us to do this right here. The Feds be watching. Let me see here. How much of a delay I got? Let me do my delay check. All right. I'm gonna go 1, 2, 3, 4. Oh, like a 4-second delay. Okay. All right, not bad, not bad, not bad. All right. Uh for those that's hanging out on the U of the tube, and you may have, a question that you would like to ask, right? Um, if you look at the pinned comment that I just put in the chat, that pinned comment, that's a link to the Zoom. Feel free to clicketh on the Zoometh link and pull up and ask a question. All right. So, hello everybody who's here. If you are a mother, I'd like to wish you a very happy Mother's Day. Right. You are appreciated. Thank you very much for your job well done. Right. If you are not a mother, but you are a very helpful auntie or sister or cousin, we thank you too. You are appreciated. Right. So let's go ahead and get into this weekend chart prep. All right. If you take a Gandar over here, you can see what I was talking about here when I said we had a vicious gap up, huge gap up, right? I think I had already gone in Friday and marked my highs and lows. But what I'll do, not take everything off my chart, and I will start off by creating. I saw that we was very near an old new week. Oh, we are. There's an old new week opening gap there from 310. Y'all remember that 310 new week opening gap? I see a commercial popped all up on my thing already. Y'all remember that 310 new week opening gap we had marked out? If you don't remember, right? That 310 new week opening gap was very near, if I'm not mistaken, our completion of our market maker buy model. It was very near. Yes, yes, it is. It is. This is the completion of our market maker buy model here. Right? Remember our market maker buy model we was talking about there. This is the completion of that market maker buy model, right? And that was that new week opening gap that we had marked out, because this was the new week opening gap from last week. Was it last week? No, that was week before last. No, that was a while ago. That was from 325. Yeah, that was from 325. Last week would have been 5-4. All right, last week would have been, this was last week here, right there. That's last week there. And then that was the other one we had marked out because we was looking at price when it was in between those two, right? And we've gapped up all the way up close to the high of that 310. So price was gunning toward those levels we was watching, was gunning up there. Let's go in here. And before we mark anything, well, let me go ahead and create this new week opening gap, and then we'll go in and do it the way I typically do. Right. Haven't done a weekend chart prep in a while, so I'm a little rusty at how I used the format of it, but it's slowly coming back to me. So let me create this new week opening gap. Breaking news: Dow futures jump 500 points as traders await details on U.S.-China trade deal. Live updates. I was just reading it off my watch. Okay, there you go right there. So let's clone this. Right. Tomorrow is the 12th. So this is going to be a bullish new week opening gap. Right. Bullish new week opening gap 5/12. Because the date is for Monday's date. It's for because the trading starts at 6 p.m., but it's for the following day. Right. It's for the day that starts at 12 a.m. Right. It starts trading at 6 p.m., but the new week opening gap, new day opening gap is for the day that starts at 12 a.m. All right. So what is the new week opening gap for those who are unfamiliar with it? The new week opening gap is the difference between the closing price, the electronic closing price on Friday evening at 5 p.m. and the electronic open price on Sunday at 6 p.m. Right? That's your new week opening gap. Right? So it's the difference between the electronic closing price. As you see here, this is the Friday candle from 4:59. Right? This candle closes at 5 p.m. right there. Right? So that closing price, as you see right there, of 20,146.50 Friday afternoon. If you look at the bottom, you see it says 5/9 at 4:59 p.m. When that candle closed, the closing price was 20,146.50, right? And then the difference between that and the opening price of the 6 o'clock candle, right, on Sunday is 20,398.50. So that is a difference of Drum roll, please. Price. Opening price. That's a difference of 252 points on the NASDAQ. So we got a 252 point, a bullish 252 point new week opening gap for the NASDAQ. Right. So we gapped up 252 points. Now, that leaves a liquidity void right here. This is a liquidity void, right? There's no trading being offered between, no buy side or sell side delivery being offered between 20,146 and a half and 20,398 and a half. So that right there is a liquidity void. Okay, that's a liquidity void for those, because we rarely get a chance to talk about or see liquidity voids. That's a PDub, right? Is that's what Michael calls it, right? It's a gap. He didn't invent this, but he calls it a liquidity void. It's just a gap. It's another gap. This is a full gap, right? Liquidity void. Now, let's get into the weekend chart prep. All right. Let's jump up to our monthly candles. We haven't done this in a while, so we're going to go all the way up. Nothing can stop me. I'm all the way up. All right. So here we are. We're looking at our monthly candles. Okay. As we remember, or maybe we don't remember because it's been a while since we've done a weekend chart prep. But for those who be with me on a daily basis, you should remember that on our monthly chart, we said the monthly was in a buy program. The monthly chart was bullish. The monthly chart had expanded up, right? And we was looking for retracement. We have an area on the chart that we said we marked out. That was our range equilibrium, right? I don't know if you all could see that. It's very, very thin, right? It's very, very thin. But this right here is the range equilibrium from the time span of October 2020. Let's make this font bigger so y'all can see it. Right. So it's the span of time, right? There's a dotted line there too. All right. Darken it up so y'all can see. Bigger just in case y'all. Okay, I'm trying to see if y'all can see it. Okay. All right. So right there, that's the range equilibrium. It's the span of time between October 2022, right? It's the span of time between October 2022, all right, which would be right. Where's October 2020? Right here, right there. October 2022, that low right there, and December 2024, right? That right there is the dealing range that we are looking at for the monthly time frame, right? Tim, why are you looking at that as the dealing range? I'm glad you asked that question, little Timmy Rogers, right? This swing low right here and this swing high right here, that's the lowest low and that's the highest high from where price is currently at, right? This took out sell side liquidity. This took out buy side liquidity. So this is your dealing range for where price currently is, right? So based off of this dealing range, this right here is equilibrium. Equilibrium is halfway in between the lowest low and the highest high. Equilibrium is where you separate discount from premium, right? If you're bullish, You're looking for an opportunity to buy in a discount on a, discount PD array. Right? So with all of that being said, we said that we were looking for a price. Why isn't it trying to get it? Okay, it's not there. It is. All right. Okay, we were looking for a price to retrace back on the monthly into a discount, right? We were watching the monthly bullish fair value gap, the monthly bullish order block, right? This monthly mitigation block, and this monthly bullish breaker. These are the bullish breaker was right at equilibrium pretty much. The mitigation block was in the discount, right, from equilibrium down, right? The order block was in the discount. The fair value gap was in the discount. This is the area where we said this was our anticipatory reactionary point for the monthly time frame. In the month of April, we traded down into the discount PD arrays, right? Failed to take out the sell side liquidity. We took out the internal sell side liquidity there, failed to take out this internal sell side liquidity, right? This was our lowest low. And then we got a nice reaction off of the discount PD arrays and closed back inside the range, right? So we came down, got a nice reaction off of the discount PD arrays in the month of April, right? Here in the month of May, right, we have opened up, traded down slightly, and we're moving back up, right? With the analysis being that the monthly is bullish and the monthly is in a buy program, then we would want to see this sell side imbalance, buy side inefficiency here, this March sell side imbalance, buy side inefficiency. We would want this to become an inversion fair value gap on the monthly time frame, meaning you want to see a monthly candle close above this sell side imbalance, buy side inefficiency, and then use it as support to trade back up to all-time new highs. Okay, that's what you would want to see because the higher monthly time frame is bullish. Does that mean that May has to close above it and then use it as support for June? Or no, it doesn't. It would just be nice to have it happen with May. Why is that? Because this April candle was a very, very, very bullish candle. This was the algorithm saying, I'm ready to go up in a hurry, because we came down to a discount and came all the way back up and closed inside the range of this March candle, right? After trading all the way down here. Okay. And that gave us this retracement from peak to trough, right? From our highest high that we made, which was the high of our dealing range, all the way down to the lowest low we made. It was a 27.34% retracement. That means we moved into bear market territory. We moved into bear market territory with this retracement, right? With that retracement, we moved into bear market territory. We moved over 25% down, right? With a move. Now, on a monthly basis, right, we never closed in bear market territory. On a monthly basis, we closed 14.31% down. That's correction territory. We closed in correction territory on the monthly basis. On a monthly basis, we traded into bear market territory, right? But we never closed on a monthly basis down there, right? We only closed in correction territory on your monthly chart. Okay, so looking for this monthly candle to become an inversion fair value gap at some point in time, because we are the monthly time frame is bullish. Okay, like I say, does it have to happen in May? No, it doesn't. We've been in a lot of high resistance, so price can chop around a little bit. Look how we hung around here before hitting a peak, right? We hung out for 1, 2, 3, 4, 5, right? You could say 6 months, right? We traded in this range here for 6 months before going up and making the peak. And then we started to retrace back down. So we hung around here for 6 months. That's half a year that we hung in this area right here before making the peak and then trading back down, right? So we can very well come back and hang out some more. Right? Don't be surprised if we do. Don't be surprised if we do. Now, monthly high, monthly low. We have already engaged with the monthly high. Right, I have marked that out already, so I'll just turn it on. Right, we already engaged with the prior month's high. Right, the prior month's low is all the way down there. That's our prior month's low. We're so far away from it. I just keep it turned off on my charts. I don't leave it on because we so far away from it. I just try to keep, just like I don't keep the range equilibrium on anymore. We're so far away from it. I just keep an idea of where it is, right? I keep it annotated, but I keep it hid. I keep it turned off. All right. Now let's drop down to a weekly chart. Okay. So dropping down to the weekly chart. Weekly. Yeah, hold on for a second. Had to make some updates to that. Had to make some updates to that, so I had to resave it. Okay, so on the that's that monthly, and we got, matter of fact, just see we gapped up above consequent encroachment of that monthly. I'm gonna tuck this off in there and unhide it. All right, weekly chart, weekly. All right, we said that this right here was the completion of our market maker buy model. That's that buy side liquidity that we said was the completion of our market maker buy model there. Our prior week's high and low. This is our prior week's high and low. That's our weekly high. That's our weekly low from the prior week. Okay. In this case, since the market has already opened and we've gapped up above the prior week's high, right, for right now, I'm going to hide the prior week's low because we're so far away from it. And we want to keep in mind of, right, if price starts to get weak, we have consequent encroachment of this weekly wick here on the discount end, right? And on the premium end, we got consequent encroachment of this weekly wick over here. Okay. And those are the wicks, consequent encroachments that I have my eye on, right? If you want to, you can look at the consequent encroachment of last week's wick, right? That lands right around consequent encroachment of the new week opening gap, right? But me, I like to look at the consequent encroachment of the wicks that went the deepest, right? Whichever wick went the deepest, that's the wick you want to keep your eye on. Boy, that May got a big wick. I mean, that March got a big wick, don't it? So look at it. Keep in mind, consequent encroachment of the March wick. We still have a little bit of a sell side imbalance, buy side inefficiency here on the weekly basis. That's just above the high that completes the market maker buy model. Yes, we have still got a little SIBI that's resting up there. Okay. I'll leave the SIBI there. I'll leave the SIBI there. That's a nice level to leave. I'm gonna leave the SIBI there. All right. So we got a little piece of the SIBI that's still on. This is your entire SIBI here. Right? That's your entire SIBI there. Right? We traded up to it and stopped just short of it last week. Then this week we gapped up inside of it, right? Let's go here and look at the entire SIBI. Let's put it in the 4th grade. All right, we gapped up below the lower quadrant, reached up, right, in between the lower quadrant and consequent encroachment. Now we're trading back down, and this is on the weekly basis. All right, this is the weekly basis. All right. Again, remember, we're looking at very high time frames. So think about it. Just think about if you're looking at like minute charts, right? If you got a minute chart that traded back up, right, it became close, it became down, right, and did something like this, right? So that'd be 1, 2, 3, 4, maybe 5 candles, right? So imagine if we did that on a monthly or weekly time frame, right? With the levels that we're looking at, we'll be right back to where we were when I said over here. We hung out here for 6 months before making the peak, right? We came up, came down, right? And start up, down, up. You see what I'm saying? We hung out there for 6 months. So if we were to do the same thing over here, trading in this range, right, we could be here for a while. Yeah, it'd be nice to see us just rock it off and we do it in like 1.5 months. But just remember the time frames that we're watching, right, and what we're looking for to play out based off the analysis, right? It can take a while for it to play out because of the time frame that we're looking at, right? Not saying that the algorithm moves slower on higher time frames. It's just that on higher time frames, it's a larger span of time. So it takes longer to transpire. Okay. I don't know about y'all, but them ads be driving me crazy. I got the YouTube open so I can see what's going on, and them ads driving me crazy. What's up? Y'all got something? Is this recorded or just for the gang? It's on YouTube. It looks like It is streaming to YouTube. Yes. I saw something that was in the chat that caught my attention. I told y'all I don't be looking at the chat. So y'all just be like, hey Tim. If you got a question, be like, hey Tim. And that gets my attention. All right. What's up, Chico Dread? What's going on, Chico Dread? So weekly, that's our weekly, right? That's what we're looking at on the weekly. All right. I'm gonna leave that consequent encroachment of that wick there until I get finished. Then I'm gonna take it off. Let's go down to the daily time frame. All right. So on a daily time frame, okay, daily time frame, we are above this buy side imbalance, sell side inefficiency. All right. I heard something. Somebody got something they want to say. All right. So we traded up above it, came back down after we took out the buy side. Right. Traded up to the high of it. Right. Came back down, closed on Friday. And then today we gapped up above it. Right. Gapped up above it. So now we are above the buy side and the sell side imbalance. Why is that green? If I said buy side imbalance, I'm sorry. The sell side imbalance, buy side inefficiency. The sell side imbalance, buy side inefficiency there, right? We gapped above it. We're now above it, right? So in the sense of completing this market maker buy model, right? You're looking for this to be used as support now that we're above it. Be looking for it to be used as an inversion fair value gap for support, right? Coming back to the high of it brings us back down to consequent encroachment of that weekly wick, right? That weekly wick that we was watching over there comes back down, right? Consequent encroachment of the weekly wick. Just right around consequent encroachment of the new week opening gap. Okay. And then we got that gap there. Consequent encroachment of that wick is right at consequent encroachment of that buy side imbalance, sell side inefficiency, right? And we got the overlapping of these wicks here, right? You will want to see that sensitivity in there, right? Because ICT concepts, when you got two overlapping wicks, like after an expansion up, that's where you get that implied fair value gap, and you be looking for that sensitivity in there. So what little Timmy Rogers is doing in his mind right now, I'm looking at this weekly wick, right? I'm looking at that weekly wick there, and I'm looking at this daily wick here because they're in the same proximity, and I'm looking at this little area right there for the sensitivity. I'm looking at this as a type of implied fair value gap. That's what I'm doing right now. Every time Michael teaches something, I fractalize it. I take it through times. I take it through. I don't. He might come out years later and be like, "Yeah, y'all remember when I taught y'all this? You can use it like this too." You know why? Because so many times, right? Going back to, let's go to the first presentation fair value gap. Story time. I'm going to stop sharing my screen right now. When Michael, before he gave the first presentation, come here, microphone. Before he gave the first presentation, the fancy name of the first presentation, do y'all remember back in like 2021, I think it was either 2021, 2022, he would say, take the 948 BISI and extend it out to the right. Right? That's all he would say. Take the 948 BISI and extend it out to the right. Or he would be like, hey, take the whatever SIBI, extend it to the right. Take this, extend it to the right, right? So I started digging it because he always says, I give clues to see if anybody will pick up what I'm really showing you, right? So I started looking at like, hey, this Bissy or Sibby he keep pointing us to, that's the first one of the morning session. So I started looking at all the first Bissies and Sibbies. I started looking at them for the first one of the session, the first one of the day, the first one of the week, the first one of the month. I started looking at all the first and extending them out, right? Started looking at all the first and extending them out. And then guess what he said a couple years later, or whatever it was? He gave us the fancy name of the first presentation, fair value gap. Oh, now it was all the rage in England. Everybody wanted to talk about the first presentations, right? And then guess what? Sauce, he just dropped. When I was waking from a slumber with the old man bladder at about 6:45 in the morning on Saturday. Got up to go and urinate. Picked up my phone and I said, hey, let me see if anybody doing something funny on Twitter, twit. Opened it up and saw that Michael was having a shotgun Saturday. I'm like, it's 6:45 in the morning. This can't be real. That's not Michael. Click on it and he's talking. Look at the time. It said that it started 2 hours ago. Right? So I lay down in my bed while it's playing, fall asleep, wake back up at 9. He's still talking. This can't be so. So I started listening, right? And what I haven't gone back and listened to the whole thing. But when I woke back up at 9, I heard him sometime between when I woke up and when he ended it. I heard him talking about those things that we call first presentation fair value gaps. Guess what he said? He said that there's a first presentation fair value gap for every hour. Now, did I not tell you when he first started talking, before he gave it the name first presentation, I started looking at all the first of the day, the first of the month, the first of the year, the first of the week, the first of the session. I started looking at all the firsts, right? And then now here we are years later in 2025, and he's revealed that there's a first presentation every hour. This is why I fractalize everything that he says. If he gives a concept, I go through and I look for it. I do it in the fractal nature of time, and I look for it in a fractal nature of price, going through the time frames. Horizontal and vertical. I'm looking at it horizontal and vertical, right? Everything that he talk about. That's just a little tip from me to you. Anything he mentioned, look for it horizontal and vertical, right? Do that. So that's why I was just saying I'm looking at this little area here, how we got this consequent encroachment of that weekly wick overlapping with the consequent encroachment of that daily wick right here. And I'm looking at that as a type of implied fair value gap. All right. Okay. Get it? Got it? Good. Okay. I look for everything. I look for it everywhere. All the concepts, I look for them to play out on all. He don't have to tell. Just like gang. Who remember, right? OG gang. OG gang. I'm going to stop. No, I ain't going to stop sharing my screen. Who remember what we used to say about fair value gaps before he gave us the fancy term inversions? Before he gave us the fancy term inversions, what did we used to say, gang? This, and I want somebody from the gang to answer this, because this is for anybody who's watching this right now. Be like, oh yeah, it's real easy for this guy in the pink shirt just to show up and say, hey, I used to do this before ICT said it, and I'm such a genius. What did we used to say about fair value gaps, gang? What did we used to say about fair value gaps before Michael said anything about inversions? Somebody tell me. I need you to speak. I see somebody in here. I see people in here. All right. This Sibby right here. What will we say in the past about this Sibby right here? Now we'll say, hey, we want to see this become an inversion fair value gap, right? But what did we used to say before we had the fancy term inversion fair value gap? They can't see, they can't hear you typing. I need someone to talk. The people on YouTube can't hear you typing. And I can't show the screen because Zoom doesn't show itself. Like if I put the chat over there, they can't see it. Zoom don't show itself on the screen. So I need you to talk. I don't care about the loud background in the mall. I don't care. Somebody read what Here to Learn and Share is saying, what she's typing.
Below it, resistance. Above it, support and resistance concept.
Yes. Any fair value gap that we had on the chart prior to Michael giving us the fancy term of inversion fair value gaps, we said if you're below the fair value gap, we want to see it act as resistance. And if you're above the fair value gap, we want to see it act as support. And then a couple years after that, he came out and gave us the fancy term of inversion fair value gaps. And it was all the rage in England. Everybody was the inversion fair value gap master. But over here in the gang, we had already said, if you're below a PD array, not just a fair value gap, you want to see it act as resistance. If you're above a PD array, you want to see it act as support. And you know why we were saying that? Because over here in the gang, we focus on the very first thing that Michael taught us, right? You see this old first stuff? You see how this first stuff is coming into play, right? Let me share with y'all a quick story again, all right? And I'm going to get into the first thing that he shared with us. Because Michael was talking about these first presentation fair value gaps, right? And he was talking about these new week, and new day opening gaps, right? How important they are to price. Look, I got to stop sharing my screen for a second. I'm gonna share my screen in a minute, right? If you don't understand that your boy cooking right now, I can't help you. Okay, so dig it. First presentations, he was putting a big emphasis on it in 2024 for his son Caleb. First presentations, big emphasis on it, right? New day and new week opening gaps, big emphasis on it. Little Timmy Rogers, right? I had already peeked that the first was very important, right? I already peeked that before because I started looking for the first before he gave us the term first presentation. So then I said, what is the first thing that he taught us? The first thing that he taught us in core concepts was order flow and price delivery. That's the very first thing he taught. He didn't start teaching PD arrays until month 4. The very first video was talking about price delivery, expansion, consolidate, price delivery, talking about price delivery and order flow. All things he was talking about price delivery. He was talking about institutional sponsorship. He was just talking about order flow and price delivery. This was the first thing he started introducing us to, right? So what do he talk about in order flow and price delivery? Let's go and see, right? I have fancy dancy slides, right, that I share with the gang, during these lectures and stuff, if you will, right? Let's look at order flow here, right? So inside order flow, what do we have when we discuss order flow? We got buy and sell programs, right? We got buy programs and sell programs, right? If you are in a buy program, right, what do you want to see price do? If you are in a buy program, you want to see price use premium. You want to see it push through premium arrays and use discount arrays as support. So what does that mean? If you're above a PD array, right, that means it's below you and you want to see price use it as support. If you are below a PD array, that means it's above you and it's a premium and you want to see it used as resistance. So if you're in a sell program, you want to see it use premium PD arrays as resistance. If you're in a buy program, you want to see it use discount PD arrays as support, right? And that's just based off the fact that buy programs and sell programs are the essence of order flow. Order flow is the first thing that he taught us. So that has to be the most important. First presentation fair value gaps are very important. New day opening gaps, new week opening gaps are very important. What is the new day opening gap and the new week opening gap? That's the first PD array made that day. That's the first PD array made that week. Boing! I just blew somebody's mind. I'm asleep. Let him cook. Let him cook. Woo! Now, let's get back to it. Y'all looking like, oh my goodness, this crazy joker is a genius. Daily charts, right? Let's mark our daily high and daily low, right? I already marked it, but we're going to mark it again, right? That's our daily high. That's our daily low, right, from Friday. Okay, nope. Now, this is in my way, so I'm going to move it. And then, did I delete the other one already? If y'all hear my son back there yelling on the game, I'm sorry. Okay. So we got this Civi that we were trading up into. We spoke about this last week. We said that we were wanting to see this become an inversion fair value gap to be used as support to complete the market maker buy model, right? We're above it now. So at this point now, since we had this huge gap up, we're just looking at this as one complete move up, and we're looking at this as an inversion fair value gap right now. That one complete move up. Yes, we do have a liquidity void here, so price can choose to come back and trade into it, right? But for right now, we're looking at it as one complete move up. Price is in a hurry to get here, right? So we're looking at this as an inversion fair value gap, right? Because the market cares nothing about our man-made stop times. It just stops because they turn the computer off, and now it's showing you where it was in a hurry to get to, right? It was in a hurry to get back up here and seeming to be in a very big hurry to get there. All right. So remember over here what we talked about, right? Remember over here we talked about. Remember I said I'm going to go through this candle by candle, right? We said that price traded above the highs, right? Showing us that it wants to go that way. And then the next day we came and traded below the sell side and then went back above the high, traded above the high again, showing you that it wanted to go that way. But when you be trading, you want to see it show you which way it want to go. Engage, you want to see it expand in the direction of the draw, right? Then you want to see it engage the opposing liquidity, right? And then you want to see it deliver, right? So this day here, right, we did it candle to candle, right? We traded above that high, right, showing that it wants to go higher. Then the next day we took out the low and then traded back to the high, right? So now this day here, we traded above the high, showing that we wanted to go higher. But this time we took 1, 2, 3 days to trade back to the low, right? And then another day to trade back to the high. Same thing, right? Reaching higher, retrace to the low, reaching higher. Okay. So here we came up, boop, we're trading back up here, right? And we're reaching up, showing that we want to go higher. Had an indecision day. And then on the start of the next week, we gapped up, right? We gapped up, showing that we're in a hurry to go up, right? So now we just look for PD arrays that we marked out as being support and resistance, right? Now that we've left this area here, right? The algorithm is showing you that it left this area here. So now you're looking at all of this here as a balanced price range, right? Meaning, okay, the algorithm is showing me that it's done with this for now until we go and do something, right? Until we go and do something, it's done with this, right? What's the something that we're looking for it to do? Complete this market maker buy model, trade up into that buy side there, maybe even finish off this weekly, reprice this weekly SIBI here, right? So we're looking for this area down here to be a balanced price range because we've got efficient delivery here and then we've left that area, right? Efficient delivery there and then we've left that area. Okay. Get it? Got it? Good. So on the daily, again, remember we looked at consequent encroachment of this wick, which was right around here. I think it was. We had consequent encroachment of a weekly wick that was right around the high of that. And then we got our daily high and our daily low. And we're already above our prior day's high, right? And we're already above our prior week's high, right? So we've already engaged with the buy side, right? We started the week off, boom, immediately engaged with the buy side, showing, hey, I want to go up, right? Now we're looking for it to take some type of sell side to give us an opportunity to participate. Well, Tim, what if it keeps running and doesn't give us the opportunity? Guess what? It keeps running and doesn't give us the opportunity. But then once it takes it, then we say, hey, how did it take it? Right? Is it offering me an opportunity to come back into some form of discount inside our new range? Right? Because we said this right here is a balanced price range. Is it giving us some type of opportunity in our new range? Right? Because what do you look at when you have your dealing ranges? Right? This is our low that took out sell side. Right? As of now, that was the high. Now we got a new high right there. Right? So this is our dealing range thus far. Right? And what do you look at inside your dealing range? Well, it's a bullish dealing range. If the lower half is efficiently delivered, we focus on the last expansion leg, right? So you look at the last expansion leg and see if it gives you some type of opportunity to trade in a discount of the last expansion leg. As of now, where would that be? Around there where we was looking at. As of right now, right? But if it keeps running up here and doesn't give you a chance, then you just look at where's the inefficiencies and the discount of the last expansion leg of our dealing range. Just like that. All right. Daily, we'll 4 hour, nothing really big to look at on the 4 hour. So we're not gonna go any lower than the daily right now. I think the daily is low enough for us to go on this weekend chart prep, right? Um, just take the same concepts that we've been talking about on the monthly, the weekly, the daily, right? And apply it to the 4 hour, the 60, the 1 hour, the 15, the 5, the 1, the sub 1. Use the same concepts, right? What is the higher time frame telling me? Are we in a buy program or a sell program, right? If we're in a buy program, I'm looking for reasons to buy in a discount. If we're in a sell program, I'm looking for reasons to sell in the premium, right? That's all you got to do. Price action, I mean, order flow and price delivery. That's the most important part of it. You get that in your noggin first, and then you start worrying about those fancy little things you put on the charts called PD arrays. But if you don't understand order flow and price delivery, you will be eternally lost in the sauce and gambling. Now, shout out again to all of the mothers out there. You are appreciated. In the words of a very wise poet by the name of Tupac Shakur. That's all I have. If there's nothing for me, I will bid you adieu and tell you to continue to enjoy the rest of your Mother's Day weekend. Anything for me? Going once. Anything for me? Going twice. Anything for me? Going 3 times. You're welcome. You're welcome. You're welcome. All right. Gang, diamond members and mentees. If you are a diamond tier in the Discord, or if you are on the mentee tier for the YouTube channel membership, we will have tape reading at 9 a.m. tomorrow morning. Live tape reading tomorrow morning at 9. If you signed up for the Asian Assassins, aka the Conquering the Asian session, our first official live stream will be tomorrow night at 8 p.m. Right? We're going to be streaming from 8 to what is it? What did I say? 8 to 9:30? Did I say 8 to 9:30? What time did I say? Right? Tim, why are we streaming from 8 to 9:30 when the sweet spot is from 7 to 9? Because we're not trying to do a call out service. We're studying price together. We're studying price together. Yes, 8 to 9:30. Our first official live stream will be tomorrow at 8 o'clock. Again, happy Mother's Day to y'all. I appreciate y'all for taking out the time to come hang out with me for this past hour. And I'll see the members on the tape ring street in the morning. I'll see everybody else tomorrow at 6 p.m. for the price action recap. Y'all stay safe out here in these trading streets, man. Gone.